If you recollect that this year, on the 10th of May 2016, we had amended the DTAA with Mauritius. Thereafter, on the 18th of November 2016, the DTA with Cyprus was amended. And today we have amended the DTA with Singapore. In fact, in the double taxation avoidance agreement that we had with Mauritius, the Singapore arrangement was based on the same terms. And one of the terms and conditions was that once the agreement with Mauritius stands amended, similar amendments will be brought to the Singapore arrangement. The Government of India since 1996 had been making a series of efforts to amend the arrangement with Mauritius. But I must say that the year 2016, which ends tomorrow, has really been significant and historic in this direction. So all the three major DTAs which had come in for considerable comment in India now stand amended, and all three have been amended this year. One of the reasons and the apprehension had been that these DTAs had given a complete exemption in the name of tax avoidance on capital gains to possible investors because there was no capital gains in the contracting country. And there being no capital gain in the contracting country, the beneficiary would not pay any capital gain in India on the ground that the taxation rules of Singapore or Mauritius or Cyprus would be applicable to them. And in those jurisdictions, there was no capital gains. And therefore, there was a reasonable apprehension that these agreements were also being misused for round-tripping domestic black money, organizing its flight outside the country, and bringing it back into the country through these three routes. And since there has been a significant effort by the Government of India to eliminate wherever it can the possibility of black money and its user in India, the revisiting of these arrangements was extremely important. And along with the battle against black money that is being fought currently in India, it's a very happy coincidence that by amending them, we've been able to give a reasonable burial to this black money route which existed. So this year, all the three arrangements have been rewritten. Like the Mauritius arrangement, which has been amended, this one envisages that this will continue to apply till 31st of March 2017. All investments in India which come before or till 31st of March 2017 would be grandfathered. For a period of 2 years till 31st March 2019, the capital gains liability would be shared half and half between India and the country of the residence of the investor. And after 2019, the entire capital gains would come to India. And this would be phased out. So this is the revised arrangement, which is on an identical pattern as the revision to the Mauritius arrangement. With these three, this whole demand which has been raised repeatedly in Parliament and outside, and there was almost an outcry that these routes were being used for tax avoidance. I think we've successfully stopped round tripping through these routes. I may also in this regard mention that just about 2 months ago, the Department of Revenue and the CBDT had another kind of arrangement with Switzerland, which was conventionally considered as the haven for all tax avoided money being parked there. And that arrangement was for sharing of information. And therefore, with effect from 2019, Switzerland would start giving us almost real-time information with regard to investment by India or Indian entities in Switzerland. And this would include all investments or expenditures which are undertaken with effect from 2018 onwards. So the information of 2018 would be given in 2019. And the arrangement with Switzerland also has been a very significant milestone in this campaign against tax evasion and parking of assets outside the country. I must say that 2016 therefore has indeed been historic, because 3 double taxation avoidance agreements which provided for an evasion-friendly route for round-trippers has been effectively blocked and rewritten. And to add transparency, with Switzerland, the arrangement has been entered into this year. That's all I had to say.
So one question.
One by one, please.
So I have one question. You're saying that a lot of money, I mean, we all know a lot of money is allegedly parked in accounts in Switzerland, etc. So whether it is in Switzerland or in Singapore, will this information be with retrospective effect or with prospective effect?
No, you see, these arrangements are with regard to the investments. The DTAAs are not information related. The effect of the DTAAs is that if you now invest through these routes, you don't get the benefit of non-payment of capital gains in India. As far as Switzerland is concerned, with effect from 2019, the arrangement has been that they will start giving us all informations about investments and monies parked in 2018 in Switzerland.
So when you said that taxes will be shared 50-50 between India and Singapore up to March 2019, and then the entire capital will come to India, so what does this 50-50 mean, and would there obviously be a threshold that will be applicable?
No, all taxations which are assessed as capital gains, because we are phasing out a decades-old arrangement. So this is a phasing out arrangement which we had with Mauritius after a detailed negotiation, and an identical arrangement. That is to say that the exemption will disappear with effect from 1st of April 2017. Prior investments will be grandfathered. Post 2017, for a period of 2 years, the capital gains would be shared. And post 2019, it will come exclusively to India. That's the phasing out arrangement.
Mr. Jaitley, today is the last date of the depositing of old notes into the banks. So as for what is the latest data we have on how much money has...
So the data would be tabulated and only then given.
The RBI is only till 10th of December. Like, can we know anything beyond that? What
No. Once it is tabulated, you will get to know this.
How much time that can take?
Well, I am not making any time. It depends on how.
When will the withdrawal
One by one, please.